All right, everybody, I'm going to stop talking now. Enjoy.
Hey, thanks, Sarah. And please, everybody, pepper us with as many questions as you can think of, because it makes my job that much easier. So good afternoon, noon, and morning even, because our panelists are stretched across the country here from DC to California, with big representation from flyover country. And it's great that we had so many people register with relatively short notice for our hot topic webinar, prioritizing during pandemics. Commissioner Rechtschaffen, I want to thank you, because it was you had the seed that started this whole topic and discussion, got the ball rolling on it. So thanks a lot for that. To the audience, I'm assuming that you've already read the biographies of our stellar panelists, and you were probably lured in by the glamour shots that were included in the email, which of course none of us bear. Well, Springer, you kind of look the same, but we bear no resemblance to those things anymore. At least I don't. So the plan for the next hour or so is to hear from Vince, Dave, and Cliff. And then we'll engage in a little bit of a roundtable discussion. And like I said, I hope you're using that time to plug your questions into the Q&A function, because we want to be able to talk to you about what you want to hear as well. So Vince, thank you so much. You volunteered to kick us off. So let's get started.
Well, thank you, Sarah. And thanks for inviting me to part of the panel discussion. Absolutely excited to be here today. And thanks for everybody for participating. Well, I thought just providing a little bit of background could be helpful with respect to what we've done. You know, I'm honored to be able to work with Indianapolis Power and Light and Dayton Power and Light. So in that flyover country in the Midwest, Ohio and Indiana. But we're actually part of a global company, AES. And as part of a global company, one of the things that really has provided, I think, us with an opportunity to hopefully be in front of this, you know, was that we really started conversations early in January, mid-January, with respect to COVID. And so, you know, safety is an absolute priority, I think, for every utility, and it's really the number one focus that we have. So, you know, we have pandemic plans, we have continuity plans. Those are things that are in place. But we realized early on that the current form, or the form that we had, you know, in place in that January, February timeframe really wasn't going to be exactly what we needed for what's in front of us today. So we really started digging into those early to understand them, to understand what the differences would be. And pretty quickly and pretty early on, we realized that work from home was going to be something that was just very different. Typically with our continuity plans, you're looking at backup facilities, but you're really just taking a group of people from facility A and moving them to facility B. This we realized wasn't going to be that way. So we really had two goals, two focuses. One was to ensure that the people that had to be in place, the folks that have to be in those bubbles that we talk about, were going to be as insulated and as protected as possible, but then to also move as many of our people as we could out of our workplaces, to be able to really ensure that they were safe and could continue to work and be effective, with the goal of keeping everyone safe, but then also keeping the power on. We were not prepared at the beginning to really do that. So it took a lot of work by some incredible teams internally, our IT teams in particular, to really take some capability that we had. You know, Teams is an example of one of those things, and really roll it out to really our entire platform. Not really even just Indianapolis Power and Light, Dayton Power and Light, but across our entire U.S. and global footprint. So we could get into a lot of details with that, but that was really a solid 3-week push in that February timeframe to really be in a place where by early March we could start making some decisions and start moving some folks out of the offices, so that by about mid-March we really had better than 50% of our people out of the offices and really working from home. One of the things I'm really proud of is that we were able to move our entire call center into a work from home facility, and continue to be able to keep that same kind of consistent service that our customers are used to. So we could go into a lot more detail. Certainly happy to ask questions about that. But really our first phase of what we were really trying to do was just make sure that we could continue to serve, move as many of our people home as possible, and then set up the right protocols around our facilities to make sure folks that were coming in were doing all the right things to really protect them as much as possible from COVID. From there, we really shifted. We moved into thinking about, now what's next. One of the things that popped up pretty quickly, obviously, was customers. Seeing the impact when the state started to close down and started to go into work from home and shut businesses down, we knew there was going to be a pretty quick impact on customers and their ability to kind of meet those just kind of fundamental daily needs. So one of the things we did, and a lot of utilities did this, and I think the states ultimately put in place suspensions on any kind of disconnections for non-payment. We think that was, a great move, kind of across the board, given how many people were going to be in their homes and how important it was going to be to have that energy in place. But then also the aid. We started to see at the federal level a lot of different programs start to pop up. The SBA happened pretty quickly. A number of the states moved to get that disaster area declaration so that they could get special SBA loan programs in place. That's not a business that we're in, but we do have a lot of connection with our customers. So we started to think about, well, how do we get our customers connected with the different agencies and different groups that are, really capable of helping to move, people through those programs. So we started to focus on that, both for residential and commercial. We have teams that really focus on our biggest customers, and so those one-on-one relationships were really important through all of this and continue to be. And then we really started thinking about what's next. So, we continue to work with our customers. We set up special landing pages. I don't think we're unique in the utility space for that. I think most utilities did, trying to use the tools that we have to get as much information out to customers as possible. But then to also engage, really to send information proactively to customers, obviously answering questions as they come in to be able to help them understand what it looks like now, but then what it's going to look like, as this continues to evolve. And then we turned our focus to that, not just internally, but also started working with fellow utilities and larger groups that kind of help us manage through that process to start to share as much as we can. Are we doing everything we can to keep our people safe, to keep our customers safe, our community safe, but also to think about the customer and what's next for them. So started talking about what the next phases of this will look like. So excited to be here, happy to be on the panel, and certainly looking forward to any questions we can help with.
Great. Thanks, Vince, for sharing, your perspective as a utility executive. Next, we're going to hear from David Springy, Executive Director of NSUCA, with a little bit of the consumer advocate / customer side of things.
Thank you, Sarah. And thank you, Sarah Kent, also, and welcome to FRI, Sarah Kent. I really appreciate the opportunity to participate in this discussion on behalf of the consumer advocate community. I think this is a real nice testament to the FRI team. I think FRI is a wonderful platform for bringing together consumer advocates, our regulatory community, and our utilities for really worthwhile, and candid discussion. So I think this is a great platform. So thank you for that. On behalf of NSUCA, this has sort of been a little bit of an interesting challenge. Obviously, in terms of the day-to-day, everything is happening at the state level. Every state is different, every commission is different, every utility is different, and obviously we're crossing multiple industries. So there's no simple or straightforward answers to this. And then certainly we've got Congress, doing its best to help out. And I think Congress, to the extent that it has, put a lot of money and effort towards LIHEAP and things like that, should be applauded. On behalf of sort of the consumer advocates, and again, NSUCA is about 58 member offices. We're about 44, 46 member offices in the statutory offices in the states, but also nonprofits like the Citizens Utility Boards and some affiliate members like National Consumer Law Center or AARP. So that's sort of the consumer advocate community. Obviously, that means we speak with 58 voices, which is often kind of fun. So what we've been trying to do at NSUCA is perform a couple of functions. First of all, try and sort of gather and coordinate information for dissemination to the membership. We've stood up on our NSUCA webpage. There's a COVID-19 page. It has two functional pages. One is sort of links to other national associations, federal information, things like that, are also gathering and disseminating information. So there's a lot of good click-throughs there. But then we've taken the step to stand up state pages. So every state has a page. Our members are allowed to send us links to commission orders or things like that we can put on the state pages that hopefully provide a platform for sharing. One of the things I've tried to focus us a little bit differently maybe than some of the other areas. I know NARUC is also gathering sort of state orders. I'm trying to really get our membership to focus a little more sort of on pleadings as we go forward. So once we get out of this initial sort of how do we just sort of adjust to the emergency today, there's going to be probably a lot of discussion and pleadings across the country of various varieties in terms of accounting, orders, tracking, proposals, changes to tariffs, changes to disconnection policies. We're going to start working through a lot of this as we go forward. And so, to my membership, being able to share those types of pleadings and ideas that are happening in other states, good and bad, is what we're really focused on. So it's a little bit of a work in progress. Obviously all of our members are, like most of our regulatory commissions and utilities, extremely busy these days. You send everybody home and it turns out you do twice as much work as you did when you were in the office. So it's an interesting time for us. So that's sort of an interesting resource. We've been trying to do that. The other thing that we've been really focusing on is trying to make sure that we're keeping in contact with our industry partners. So I spend a lot of time visiting with EEI, AGA, NAWC, NARUC, trying to reach out and make sure that we have communication across sort of the national platforms. Because I think at the end of the day, to get through this crisis, we're going to have to all work together and hold hands and find solutions jointly and collectively. We're going to have to perhaps discard some of the old battle points and battle processes and figure out ways to move forward for the benefit of our customers or the people that are out there, for the businesses, but also for the utilities. I mean, at the end of the day, consumer advocates, we're very focused on the consumer side, but we also recognize that having financially viable utilities, and working together is an important piece of this aspect. So I spend a lot of time communicating across sort of our industry platforms. And then finally, I'm working a lot with our membership to think sort of through this crisis. Obviously, we recognize that the COVID-19 virus crisis is really not going to correlate necessarily with the underlying economic crisis. They're not going to, quote, end at the same day. There's not going to be a FEMA or an HHS, ending of the emergency declaration and suddenly all, utility customers are fine and everybody's back to work. So even though we're starting to see, I think, some states starting to move towards opening up, and we are optimistic and hopeful that, one, the virus doesn't come roaring back, and two, that some of the jobs do come roaring back. We recognize that a lot of customers are going to need probably help over a period of time. So we're doing two things. We stood up a COVID-19 response subcommittee, and we actually have a subcommittee call this afternoon. We're trying to work on an association-wide policy resolution, some high-level points that we can use to communicate again across with our industry and regulatory partners, and to communicate with Congress some areas and ideas that we think would be useful and helpful. And I'm happy to discuss some of that later as we get into the call. So hopefully within the next week or so, we'll have something with the NSUCA sort of, name on it that gives some big level ideas. These aren't hugely detailed. But then also I'm hoping that this committee can serve as that platform as we move forward over the next several months to be the platform that gathers ideas, perhaps comes up with other resolutions, shares ideas, and gives us some idea of some of the best practices and best ideas on how we work with our utilities to adjust disconnection policies and reconnection policies and, penalties and late fees, and, even come up with things like, different tariffs or rate programs to try and ease some of the people that are really struggling through this crisis back on. So I'm hoping that we have both a near-term and immediate view out of that, and then a longer-term view as we go forward. And then, obviously everything happens at the state level. So I'm trying to keep track of everybody in that respect. So that's kind of what we're doing. I'm happy to, nasuka.org is the website. I'm easy to find right there, and happy to visit with anybody. If you have suggestions or questions or things that we think we can work together on, I'm happy to serve as a conduit to our membership for those things.
Great, thanks, Dave. I jotted down so many things already, both during your and Vince's comments. So I hope everybody in the audience is doing it as well, and send your questions in. I can anonymize them, I suppose. Well, no, maybe everybody can see them. I don't know. Forget I said that. I make promises I can't keep during COVID. One thing you said, Springy, was about alignment of interests. And I'll take any opportunity to bring up one of the incredibly divisive figures in the utility regulatory world, Scott Hempling. But maybe when we get into our roundtable discussion part of it, we can talk a little bit about what those interests are that I think all three of you have, and how almost perfectly they're aligning right now. So let's make sure we follow up on that. And then Cliff, I want you to make all the comments that you'd wanted to make and planned on making, but I'd love to hear your perspective as a commissioner on the repository that David just mentioned on the pleadings, because I think one of the challenges in our roles is always ensuring we have the best evidence before us, and being, of course, heavily reliant on what is provided to us. So if you could throw that in maybe at the end of your comments, I'd love to get your perspective.
I'd be delighted to. Thank you, Sarah.
Thank you.
And I apologize, Vince, because I missed part of your opening remarks. I cut myself off, proving yet again that my kids are right. I'm a clueless boomer. I don't know how to use any technology. So I hope I didn't miss anything. I would say from our perspective at the California Public Utilities Commission, the responses from all sectors, our utilities and others, has really been quite outstanding and cooperative. The key area of our immediate focus has been, as Vince talked about and David talked about, providing a broad bucket of consumer protections for residences and small businesses. We've already seen residential usage going up by 15 or 20%. And our customers were facing very high bill increases currently over the next few years, even before COVID, because of wildfire mitigation costs and other bill pressures. These protections include what a lot of other state utilities commissions have done: prohibitions on disconnections for non-payment, waiver fees for reconnections. We've told the utilities to implement payment plan options, and so forth. Our protections are in place for a year. I know other states have said earlier end date. We have not yet extended protections for large commercial and industrial customers, although some folks have asked us to. We've taken a number of actions to try to minimize rate impacts more directly. We postponed rate increases for gas customers in Southern California until next January. We also, in Southern California, are about to decrease the rates in our highest tier, which currently has a very sharp differential from the next lower rate, since the COVID usage will move more customers into that category. We have a unique, we have a special program in California that provides a climate credit, an offset on people's bills, and we accelerated the payment of that program to earlier months. So that provided some immediate relief to customers, not a huge amount, but some amount of bill minimization pressure. We've been taking a lot of actions to increase access to our low-income bill assistance programs, and that includes additional outreach, suspending program removals and renewal requirements, and other things, asking the utilities to really help us with that. We've seen a significant increase in enrollments, probably a doubling and a tripling of the regular monthly new enrollments in those programs. We've undertaken some efforts to protect some of the non-utility energy workforce that depend on utility-funded programs. And in particular, we directed the utilities to extend loans or 60-day advance payments, but essentially loans to providers of our low-income efficiency programs who can't operate now. They can't go into people's homes under the shelter-in-place orders, and they were worried about losing business and a dedicated workforce. And then another set of issues I'll just highlight that we've been dealing with is making sure to identify essential utility work, and that is especially important here in California because of the wildfire mitigation efforts underway that we want to make sure continue throughout. We've had to work out some conflicts with local jurisdictions about allowing upgrades to go forward, and also as folks I'm sure can empathize with throughout, work on infrastructure that can require shutting off power is much more difficult and unpopular when everyone's home during the day, and we've had conflicts to try to resolve that. Just thinking about going forward and prioritizing for the future, the utilities have been tracking COVID-related costs and memorandum accounts, both water and energy. And I should say that the protections that we put in place I extend both to our energy and our water consumers and utilities. Some of our utilities have asked for expedited treatment of their GRCs, requests to improve financing transactions or accelerated cost recovery or otherwise. And largely, we have said we're going to be focused more on protecting consumers right now rather than stabilizing impacts to utilities and their finances. Utilities have raised understandable concerns both about undercollection because of lower sales and uncollectible costs that they simply won't be able to recover because of the impacts of the recession. On the first issue, for us, it's an easier issue than for other jurisdictions, the issue of lower revenues because of lower sales. Because we've decoupled revenues from sales, our utilities will be made whole in a true-up proceeding we have annually that adjusts for lower costs. On the issue of uncollectible costs, and I know David mentioned going to Congress for relief, our utilities have asked for guarantees that they can recover those costs. We haven't provided that, but that's certainly something under consideration. I think I'll stop there, just make two other points. One, a looming question for all of us is, if assuming we allow recovery of uncollectible costs or others, over what time period should that happen? Maybe easy to postpone some of those costs for consumers taking tremendous hits right now, but it does become a larger hit on the pocketbook later on. I think the idea of standardized pleadings and expert testimony, whatever tools can be developed, is a very good one. There's going to be a barrage of applications and a lot of work to be done. And some of the issues are very similar to the extent that consumer advocates and ratepayer advocates can share in benefits from standardized pleadings or other expert materials. I think that would be very useful in our processes.
And Cliff, if it's okay, I've got a question, another commissioner to commissioner question for you, if you don't mind. One of the things we've been doing in Indiana, and not uniquely, I'm sure, but whether it's been on our own or through requests from stakeholders that have come to the commission, we've been reevaluating our rules and other guidances and making process changes where necessary to address the unique circumstances that we're all in. And I wondered if you could share any insight from your commission on how you're identifying similar type issues, and even going forward, because I mean, we're all just making our best guesses right now, right, about what the future is going to look like. And there's obviously a great degree of uncertainty with that, but if you could share with us what your commission's doing as far as process.
We're doing a couple of things, Sarah, just to get ready for what we anticipate coming. We are requesting and getting from the utilities weekly or biweekly data about customer usage, under collections, enrollment, and bill savings programs, and so forth. So we have that material at the ready. We've also been using a rate bill impact forecasting tool that tracks all approved and pending rate increases. It gives us a holistic view of the impact of all applications and other requests on ratepayers. It also allows us have a very granular analysis of rate changes across customer classes and how, if we wanted to change the timing of cost recovery, that affects bill impacts. We've been experimenting with expediting our decisions. Actually, over the past year or two, we've been required to do that for dealing with wildfire mitigation proceedings and public safety power shutoff proceedings. We've learned to get those through in a shorter period of time. We actually have, in a separate docket dealing with rules reform, a template for doing proceedings in an expedited way, starting from start to finish in a year with earlier discovery and so forth. And we may implement those kinds of procedures for some of the applications that we'll get going forward. We're thinking, are there other things we can do to handle finance requests or rate requests differently or faster? Could we hire external consultants to speed up analysis of applications? I don't know. Those are things we're still thinking about. And I certainly would welcome your suggestions and, others who might be in the audience today about thoughts they might have of how they're going to deal with the anticipated increased workload.
Actually, that's great. I mean, I don't know if it's an appropriate use of the chat or the Q&A function, but if anybody has best practices that they've already had great success with, yeah, share those. And Cliff, how proprietary is that that database analysis thing you were describing? Because that just sounded super useful. Is that something you guys created within the commission, or is it something you're licensing?
Well, we're happy to share it with you. It was an intensive effort, but it was done internally by the commission. But the methodology is something we'd be delighted to share with other commissions.
Great. No, we'll do that offline, but that's super interesting, and maybe other people will want to take you up on it as well. So we've already got a couple of questions come in, and actually I'll go ahead and do those because I think those are probably more important than anything I might natter on about. So one question that came in: do you foresee any legal challenges to commissions postponing utilities authorized rate increases from recent rate cases? Because I think we've all, regardless of our position, found ourselves at somewhere on that spectrum, either with a recently issued order, a pending tariff change, or even a pending case. So any thoughts? David, basically, do you plan on suing or against?
Well, to my knowledge, commissioners don't let us write orders. I wish they would. I think that's an interesting question because, I can't probably comment on the spectrum of legal questions involved. I know that, for instance, some states, in terms of their governor's emergency declarations, stalled or suspended statutory obligations. And so, question whether that's legal or not. But I mean, I think that's there. There is certainly a concern as we move forward about pending rate increases, whether they should be implemented, obviously, given this, and whether they actually, if you look at sort of current data, whether they're even representative of underlying costs and such. So there's sort of a lot of questions there. And I think just, I think from a political standpoint, adding sort of additional pain to the injury that's already out there is certainly a question. But I think that there are, legal questions about, where in terms of the process we are. I know that a lot of our members are filing requests to suspend those. I can't speak to any individual state, but I think it's one of the challenges we have is optimally, if you file that and it turns into a legal challenge, that legal challenge will, go on for quite some time. Maybe that accomplishes the goal, but ultimately, I think we'd rather find working solutions, across the board that work for everyone, and figure out ways to avoid, those types of questions.
And before you other two jump in, maybe we can also use this particular issue to highlight that alignment of interests, because I'm hearing things like not unnecessarily increasing a customer's energy burden, making sure people are able to pay, but also keeping utilities whole. So Vince, it looked like you were about ready to say something.
Well, actually, it was kind of on that point, and I think David talked about it, Cliff did as well. I think there really is a lot of alignment. I think we can all step back and look at. We all recognize this is new ground for everyone. This is not something any of us have been through before, and it's impacting customers across the entire spectrum, residential all the way up to the biggest industrials. And David made a point earlier. I thought was a good one, that this is not something that gets solved in a month. Customers. I've seen different numbers on this, but 50% plus of people could live paycheck to paycheck. And so if you lose a paycheck, you lose a month of income. It's not like the next month, if you were able to go back to work and start to work, you're going to have those dollars to be able to make up the difference. And so, I think this is one of those places where that alignment and that collaboration, we really do kind of line up well. The question that was asked in particular, in my mind, it begs two things. From a utility perspective, there's always an earnings question, right? We've got earnings, and we've got some obligations to try to meet those things. But there's also a cash flow issue that goes with it, and those two things can be a little bit mutually independent. Obviously, if it doesn't impact earnings, then you look at the cash flow and you look at how do you find maybe other ways to ultimately solve that question to be able to postpone, because I think we can all see that it's going to take time for customers to get back in a place where they're able to make those current obligations and then start to think about how do we make up for those past obligations. Ideal situation, every individual customer is able to kind of manage out of this on their own, but that's not always realistic. A lot of customers went into this already struggling on a day-to-day basis to just meet those daily needs, and so those folks will be impacted. A whole new group of customers will be impacted. So I think this is one of those places where we need to work with our regulators. We need to work kind of across the states with the other utilities. We need to look up to the federal side to see, dollars are pretty cheap right now, right? I heard somebody at the Federal Reserve talking the other day where people are actually giving dollars to the federal government to hold, and they're paying them to hold those dollars. So it's almost a negative interest rate. So, are there opportunities for us to get loans to utilities to help carry that cash for customers for periods of time, so that we're keeping that piece of it a little bit more neutral, to be able to allow utilities to potentially hold off increases for a longer period of time. Accounting treatment's important, and if you don't have the accounting treatment in place early on, then it's difficult to go back and get that accounting treatment later. And so I know a lot of us are asking about deferrals and that type of thing, to be able to put a placeholder on the earnings now, but then being hopefully respectful and understanding the issue for putting those additional costs on top of customers right now when they can't meet their current obligations.
Yeah. Sarah, can I jump in for a sec?
Yeah.
So only because of the way you framed it, I want to clarify something.
Sorry.
We certainly are looking for ways to work with the utilities and the regulatory community to come up with answers, and out-of-the-box answers if necessary. I would not characterize what we're saying as we're concerned about making the utilities whole.
I'm sorry.
Utilities are going to be whole, and that's really not our obligation. It's interesting conceptually. If regulation in and of itself is supposed to be a substitute for competition, what is happening in the competitive world out there? People are downsizing, they're reducing costs, they're minimizing, they're cutting executive salaries. They're doing a lot of things in the competitive world that are, reducing expenses across the board. We think utilities have that same level of obligation. They need to be looking internally and going, we can't just proceed as normal and expect that we're going to get recovery for those types of expenses. We think there's an obligation for utilities to be minimizing expenses and trying to reduce what ultimately becomes the question of the fuel that we need to come up with. Things like tracking orders, what we've seen so far is they're kind of high level and vague, and they talk about costs from the COVID. But, there's also savings going on from the COVID. There's projects that are not being done. There are things that have been deferred. There's revenues or expenses that are not being incurred. And we think a balanced approach probably has to account for both of those in any type of tracking order. So, I would not characterize us as wanting to make sure that the utilities are whole. Those are going to be interesting arguments. We also
what I'm hearing from you though is that there is a great opportunity for the regulators in this situation, as far as making sure the prudency review is very thorough, making expectations clear across the board about what will be necessary to to issue decisions going forth, and broad undefined terms like COVID expenses aren't helpful. I don't think those would be helpful to anybody as far as that goes.
Yeah, I think it's vitally important for the regulatory community to set some initial expectations about, minimizing and conserving and working together and coming up with solutions. And but there should not be any expectation that going forward looks like what we saw last year. I mean, it is I think we all have different obligations going forward.
Well, let's turn it over to Cliff again a little bit and get his take on like roles and responsibilities as well. Are you?
Well, this time it wasn't my fault. I got I'm on a landline, so I was on a cell line and service got cut off. So I'm really having quite the Zoom holiday today. What's the question, Sarah? I didn't hear the question. I apologize.
Point counterpoint with David. No,
just say
I don't even. Don't. I want you to keep your job. Don't do that. Honestly, I've kind of forgotten what the question was. So, heck, let's just move on there. I think it started off with alignment, and I overly broadly aligned everybody. And now I was going to ask you guys, and you were kind of alluding to a little bit of it, but what's your best outcome? If there were a fairy tale ending, kind of looking ahead, what's your wish list as far as either outcomes or changes or anything? Yeah, that's a new one, isn't it? And here, I'll give everybody a little bit of a break and ask a specific question while you think about those answers. Are any other states experiencing issues with LIHEAP disbursement? Is this it's come up a few times in conversations in Indiana, and I think we touched on it a little bit before the panel started. So while you're thinking about your wish list, what about LIHEAP funds, or are there places having challenges getting that out, I guess, and not necessarily through the utilities, but like it's just hung up somewhere?
Well, I guess I would add, I've heard, in terms of the LIHEAP, I've heard sort of anecdotally that we're not seeing the money flow. So I don't know if that's a Congress thing or a state thing or an appropriations thing. I know that one of our concerns in the Nasuka area is that, LIHEAP has historically been a fairly narrow program with, fairly strict requirements and really kind of more or less aimed at heating customers historically, for better or worse. And so we're concerned that LIHEAP may not provide, even with the congressional money, the type of platform that really gets to sort of the broader set of newly unemployed customers who, may have never heard of LIHEAP, may have never applied for it. So we think that there's probably a lot of work in that area, both in terms of reforming our LIHEAP practices at the state so that more people qualify. Probably maybe in the short term, figuring out how to focus LIHEAP on the upcoming heating season, or the upcoming air conditioning season, to address customers as we move into summer heating or summer heat, I guess. That was inartful, but again, focusing, instead of focusing on the heat question of heating your home, I think a lot of people will be at risk as we move for air conditioning load. And so sometimes the programs don't meet that. And again, at the end of the day, I think we need to be talking with Congress about some additional funding across the utility spectrum for utilities to just deal with some of the uncollectible issues, just because I think LIHEAP is sort of one solution and a narrow solution, but it's not going to cover a broad enough array of customers. And so I think we're going to probably need more direct help. And only on the sense if we can get more direct help from Congress, it hopefully would then minimize the level of acrimony and fighting that we probably find ourselves in as we go forward. So that's kind of what I'm hearing from my people.
Okay, and before the other or the two offer their responses as well, we had a follow-up question from a different audience member that might play into your answers as well. Are any of your states using the federal money already appropriated as emergency utility relief, assuming it is legal to do so? So along those lines of getting the money from multiple different sources, making sure it's being used in the most effective way, I guess.
And just, I think what Dave, all the points David made were all good and valid. And I think absolutely with respect to getting into the summer season, thinking about those dollars a little differently. Rules associated as well. I think one of the rules that's out there with respect to being eligible, maybe that you've had a disconnection notice, and obviously with the moratoriums, the disconnection notices aren't going out. So qualifying hurdles like that I think we have to look at and make sure they're aligned with just the realities of what we have today. I haven't seen our focus with respect to the funding and dollars that are available have really been to try to connect our customers. We're really focusing on the Chamber of Commerce, for example, Indianapolis Chamber, the Dayton Chamber, have really completely retooled what they're doing to really almost fully focus on connecting customers, helping them get through the SBA loan process, the PPA loan process, to really be able to kind of navigate those waters. And so I think that's where we've seen, a lot of the real direct assistance happening. There's a hub program that the Indy Chamber in particular put together that I thought was really good and is kind of spread through to some other states as well. That is really intended kind of as gap funding to help customers between, when those federal loans come in through the SBA and, today just sort of meet some of their obligations. So we've seen some of that kind of create. It's really been working well.
Sarah, I'm not familiar with using any federal assistance for utility purposes. I don't know if that's. I don't think that there's a bucket that allows that yet, but I don't think we've done that. In terms of if you've given us enough time to filibuster or stall to answer your question about what's an ideal outcome, I would say there's two things that would be helpful if we can get more consensus on them. One, I think we have been increasingly focused on affordability questions across all our utility services. And this goes beyond the bill assistance programs that we have. We have bill assistance programs, but they're not affordability driven, or they don't guarantee affordability. And if anything, this crisis has exposed the deep vulnerabilities that a lot of people face and the challenges they have in meeting day-to-day living expenses. So we're trying to look more holistically about the pressures people face from the bucket of utility services, as well as housing costs and other living expenses. And we don't know how that's going to factor into our decisions going forward, if we're going to have thresholds or guidance or just more transparency. I think this will help us in that effort to really highlight the pressures that ratepayers face. And second, and related, if no crisis should go unwasted, there are certainly programs and costs that can be examined and that should be cut. They're programs that, where there's probably some fat in what the utilities do. And then there's some programs that stakeholders really like and that other commissioners might like, but they may not be as efficient as they should be or as effective, or they may not be as urgent right now. And I think we're going to have more momentum to look at those programs and say, should we reshape them, make them more efficient, delay them, or otherwise reshape them to provide some ratepayer relief.
Sarah, you're on mute.
Yes, I am. Thank you so much. I'm always looking out for each other in the utility community. I was actually going to say if you might want to go next, because I think you've had the next most amount of time to think of an answer.
Me go next?
Yeah, you, David. Oh. Yeah.
Golly, you know, I can't tell you. I mean, you know, what sort of fairy tale world we would have if you know, our optimal answer. It's like, you know, it'd be great. Listen, you know, I don't know what the right answer is, because I think you have some really sort of macro level frictions here. I mean, one, as Cliff pointed out, there's just an enormously large portion of the population that struggles day to day, no matter what you do, no matter when you go. And you certainly have a bucket of costs that, you know, even if minimized to some degree and prudently, is still sitting there, and a lot of infrastructure obligations that need to be done, things in California like wildfire mitigation. I mean, there's things that are happening. So I don't know that there's a magic answer for how we sort of make this palatable to customers. I think, you know, in the simplest sense, you know, what we need to do is focus on the near term and making sure that all customers have access to power, and are not going to get shut off, and are not going to get some giant, you know, arrearage bill and threatened and not incur penalties. And that may have to be in play. You know, some places it may be a short term, and in some places that may be sort of just a long-term state of existence. I mean, I think I always found, when I was a state advocate, I always found this sort of odd conundrum where we built in uncollectible accounts into the revenue requirement, but the customers who we just paid for the uncollectible accounts never got any credit for that. So they never cleared their bills. And so I think we have to fundamentally stop and look at sort of how we address uncollectible and where we can provide support, and make sure that that support ends up on consumer bills and providing that sort of activity. And then, you know, I don't know how you share some of the costs and obligations across the broader classes of customers. I think, you know, we will always continue to struggle. As Cliff pointed out, it's not the electric bill, it's not the gas bill, it's not the water bill, it's all of the bills combined. And all of those industries have an equal sort of argument that their infrastructure is needing replacement, and you know, those obviously come with revenue requirement impact. So, you know, long-term restructuring of sort of customer payment obligation, penalty, aid, you know, making sure that people stay on rate programs that, you know, as an example, like a percentage of income program is maybe something that some states have, some states want to look like. You know, energy efficiency and weatherization, I think, is important going forward. You know, there's no magic answer. These are, I think, going to be difficult times. And I think everybody across the board, you know, even the regulated side, I think, you know, what we're going to see over the next year is we're not going to be resource rich at the state agency level. And so, you know, how we deal with these types of things. So I think across the board, we all have to sort of tuck it in and hunker down a little bit, and just keep the focus really on customers and making sure that they have the essential needs. And you know, I would also add just a quick throw in there. Again, I think, you know, Congress has handed out $2.7 billion so far. Some of that hopefully will end up in utility coffers through unemployment payments, through LIHEAP, through others. But again, I think it's an opportunity for us collectively to work together to go to Congress and say, look, we need just a simple direct influx of money that can be used to offset customer arrearages and make sure that customers are getting bill credits so that they have the best and most, you know, reasonable opportunity to stay on these, you know, extremely vital services. So I think in my perfect world, you know, that sort of, you know, we could hold hands and get some money from Congress to take care of this. You know, that would certainly minimize some of the stress that we're going to face going forward.
For someone who started out by saying he really didn't have an answer to the question, I think you're an overachiever.
That's how I sucker everybody in.
No, but I'm writing these down probably inaccurately, since I've already put words in your mouth during this event, David. But it's great, and Vince, of course, we still want to hear from you. But I find when faced with a challenge, which this is beyond a challenge, of course, but I like to focus on big picture outcomes that kind of motivate me to keep moving things forward. And the things that I was hearing here, you know, affordability, cutting the fat that we know is out there, making sure all support is, you know, super targeted, super effective, and dealing with the cost sharing, cost allocation aspects of things, and using this crisis as an opportunity to restructure. Those are things that I think all of us can take back, you know, in our day-to-day work, and have those as kind of guiding principles as we move, you know, forward over the next weeks, months, and years. So we did have one last question come in, but first I want to hear from Vince on this one.
I'll be brief so we can get to that. And I think David and Cliff both hit on some really important things. You know, magic wand, you know, you'd get people back to work as quickly as possible and get businesses reopened as fast as possible. I mean, the sooner we can do that, the smaller that bucket is that we have to try to figure out. But we have to do it in a way, obviously, that we don't want to we don't want another spike. We don't want to, you know, we don't want another surge. And so, you know, I think there's a lot we can learn from each other, and I think that's really important. So conversations like this are fantastic. There is a very local component to this, though. The solutions that'll be right in Indianapolis will be different than in Dayton and in California and in DC. And I think I think we have to be responsible when it comes to that, and think about how these different markets are going to open up at different paces. Figuring out that how to deal with that bucket. You know, ideally you'd be able to identify people that can really manage through this on their own and give them the right amount of time to do it, and then folks that can't, and then try to focus on those and figure out what's the forgiveness for that. You know, how do we deal with those components of it? Selfishly, as a utility, getting the right accounting treatment in place as quick as possible is always helpful. But to David's point earlier, I think hopefully we're all reasonable and understand that this is going to look different for all of us going forward. So, you know, I think of those are all some of the pieces I'd like to think about.
No, that was beautiful, working together, but acknowledging everybody's individual and unique perspective. I'm going to shed a tear here. The last question that came in, and I think we're right up against the hour. Let's go ahead and end with it. And then I don't know if I close things out or if Sarah Kent wants to come back on and say anything, but the question, which I think everybody saw, what is the best way for us to learn more about the forecasting and tracking tool that Cliff mentioned earlier? That sounds like a very useful tool. As you know, I second that. So Cliff, you may be getting peppered with a lot of emails and stuff going forward, as we all want to learn from your expertise here.
That's fine. I'd be delighted to take to anyone has questions. They can email me. You can find me through FRI, or I'm on the CPUC website, and I'll get you guys in touch with the people in our energy division who pioneered this tracking device.
That is awesome. Well, I am going to ask Sarah to, she just unmuted, to come back on and follow up with any ways to reach out to her, to me, to the panelists, with any questions, comments, or follow-up you might have. And I want to thank all of you guys for spending this time with us today, as well as the few hours we spent coming up with the idea and planning the panel. So I really appreciate your generosity, as well as all of the work that you're doing, basically 24/7, I think, at this point, to keep things moving along. It means a lot. And everybody in the audience, thanks for tuning in. Please stay safe and healthy, and I'll give it back to Sarah Kent.
Yeah, thank you guys. Thank you, all of you. Thank you to all of our panelists. This was informative and entertaining and wonderful. Thank you. Thank you to all of our audience members. If you do have follow-up questions that we didn't get around to, putting the website and my email address in the chat again, please feel free to visit fri.missouri.edu to find contact information. If you don't find it there, you can shoot me an email at kents@missouri.edu. I'm seeing some of you drop off and leave, and I wish you well for the rest of you. Thank you, thank you, thank you.